All right, that's good. Let's get this back going up. See what happens here. Let's take a look at my dollar daily chart. This is kind of exactly what I wanted to see from the dollar, just as it moved to this weekly decision-making level. Like very, very strong decision-making level here. This is kind of just something that I could see happening from the dollar. Just as we think about the future of the dollar, I definitely think we'll continue to go down, honestly. Um, Thinking about this 12-month low or 12-month look that they were talking about a few days ago, definitely can see us at least getting to that low. And it doesn't seem far from where we're at right now, but on the dollar, that's kind of significant movement. So I definitely want to see us get to that low eventually. But I like what this is doing on my daily. Just created that decision making level on this 12-hour chart here. So candle 1, 2, and 3, which is super clean there. So I would love to see that continuously get respected. And I even see that area. Yep, I figured that was really close to each other. So I love when this type of stuff works out. Like this is my daily. And
Yeah.
then right above that, you have my 12 hours. So that just tells me that's a strong area for price to return to. Just this area is a strong level for price to return to. Right. We can kind of see that with the accumulation in this section here. But I just love that candle structure just to confirm that it is I'm seeing that correctly, that it is a very, very strong area. So I don't need both of these here. I'll just remove the 12-hour one.
Yeah.
But I do know it's there. I do know it's there. Then there was one right here that I do take because this one's a little bit further than my weekly. So I want to see this get respected. And then just want to see us play in between these, however it wants to do it. That's just kind of how I like to see it happen. And then once it breaks, okay, now we start to play the next levels, and then so
Yeah.
on and so forth. So see how this goes here. So dollars moving up, gold is moving down. Really like the way this looks right now in this 5 minute. That is so clean. Just thinking about where our confirmations came in. Um,
Been marching down for some time.
yeah, since 6 p.m. last night. Um,
Mm,
Sitting at
mm,
about 263 pips right now.
yeah.
So since about 6:45, just looking at potential entries and what I could have got in. This this is kind of the happy medium I've been playing with just because I have seen time and time again, especially after like 6 p.m. Um, after the market opens back up, kind of settles down, you have the Sydney session and the London session open together for a brief moment. Um,
Mm.
and then it just goes into the London session come, I think it's 11, I want to say it is 11 a.m. I could be wrong
Uh,
about that. I'll double
Here
check.
it's about,
But
it's 4 o'clock here, so it's about 11 there.
okay, cool. Um, And then so like, I just need to back test this section on this time session, honestly, just because there's always super clean plays. There's always super clean plays. It's normally the opposite play of what we got during the day, just because not only is it a completely different session, but this is a whole new trading day. And I had to start remembering that because when the market closes at 2 p.m. Arizona time, that is the end of the trading day. And so when it opens up again at what, 4 p.m. Arizona time or 3 p.m. Arizona time, it then is like a whole new trading day. So it's still the same day for us, or I'm pretty sure it's the same day for both of us when that does happen. But it's a complete different trading day. So we
Yeah,
kind of got to forget about the move that just happened prior, and then like analyze the market from the standpoint of, okay, yeah, are we going to go into accumulation phase? Are we going to go into manipulation phase? Just because New York is generally the distribution phase, which is when we get those clean moves. But that's
right.
not all the time, right? Sometimes New York does like to manipulate us before it does distribute, or even accumulate. Just move sideways before it does distribute. Um, but yeah, that's a concept. And accumulation, distribution, and manipulation is just it'll fall under specific time zones, which is actually why I have this like market session thing that we were talking about a little bit ago, because it makes it just really easy to just back test and see, okay, during London and New York, clear distribution, right?
Yeah.
Clear distribution. Tokyo, which is when the market opens back up, it's that session, accumulation. London, distribution. New York, accumulation. Tokyo, I would even say accumulated. London, distributed. And you could just start to go back and trying to see, oh, okay, and then figure out what session does the most. Of course, this session, I
Interesting.
feel, yeah, I feel this session
You
does
manually put
most.
that in there?
No, it is an indicator. If you go to FX Market Sessions by Boy Toki, they will pull that up. I customize my colors just so I can see it a little bit better. But that was about it. That's all the editing I did. Um,
FX what, sorry?
FX Market Sessions, and you should look for the one that's by Boitoki. That's the
Yep.
creator of that. Yeah, super super convenient there.
Cool. Oh, I'll have to upgrade to get it.
Yeah, you can only have the freaking three. I literally
It's a,
just renewed my subscription.
yeah. I mean, what I have is enough at the moment. I haven't needed anymore, but
I love that.
I will at some point, you know.
Yeah, no, for sure. And that's one of those things you could literally, if you have your MACD saved, that's the one I normally just pop off, just take that off really quick. And then I'll add something like this to take a look at it. And then I'll just go
Exactly.
add my MACD again just because it's super easy to add.
Yeah, exactly right.
Yeah.
There you go. Yeah, just knock it out and have a little look and suss it out and
Yeah.
yeah.
You ain't got to keep it on there. Let's see
Or
here.
just open up another tab,
You could do that as well.
and then just have that on it. Yeah.
Let's see. Let's see your price. Yeah, I think we're gonna go move toward this decision making level. I think we'll definitely move towards this decision making level. USDJPY just moved off of a strong level there. Volume. All right, so let's look at just watch this 5 minute. Mm. I can definitely see us getting stopped up in this area. Just see, I just got heard that famous bell just in. What's going on? Um, one thing I'm looking at here on my USDJPY is my MACD right now, and I'm
Oh
just
yeah,
noticing our volume. Uh,
huge.
yeah, and the other thing I'm looking at with this volume is just where it happened and where it, took us on price. Like when we're looking at the volume that came in at this level, right? And what it did to price. Yes, it did move bullish, but on this move, didn't have enough strength to take out this previous structure, these previous highs, right? And then then it corrected, which is fine. It didn't correct much on price, but allowed our MACD to show sellers and then
Mm,
start to move back again. And then now we had basically the same level of volume come in, however, at a different area in price to where now we get that break of structure and we broke those highs. And so that would have been, on this initial break would have been a good entry to take just because this is the 5 minute. If we go down to the 1 minute, we would have had a good entry point about that level. So we maybe have gotten, let's see, about 40 pips, 35 pips ish. Um, but as we get this baby right here, that weak volume bar, I'm analyzing where I am currently, and we're about, I'm going to call it probably 30 pips to this decision making zone. Dang it, I was off. 34 pips to that decision making level, excuse me. Um, and for me, I don't enter any buys when I'm moving to his level when it's under 50 pips because I've lost money time and I've learned plenty of lessons time and time again of um trying to trade through levels instead of two levels.
gotcha.
And when I'm under a certain amount of pips, I'm really susceptible to this thing just turning around from here, right? Even though there's 30 pips to go, that's why I gave myself that 50 pip limit. So it has to be 50 pips or more because, I can. It, why do I do that? Is because, okay, so there's 30 pips to go, right? I can get 10 pips. I can get 20 pips. I can get 5 pips, but I'm just more susceptible to me to just literally turning around immediately. Now, does that mean I'm not susceptible to that when I'm looking at it for 50 pips? Absolutely not. That means I'm still susceptible to the just turning around. However, I just have a little more leverage. And then based on my experience with this execution, when I try to execute like that, I have learned more lessons when it's less than 50 pips. So that's why I've given myself that, especially on gold. Um, but
Interesting.
this is a great example too. So with USDJPY, are you gonna say something?
No, just saying that's interesting.
Yeah,
I mean that's quite a bit of movement. When you're talking 40 and 50 pips as a sort of like a norm. Um, I know, and it will
yeah,
do that. I was reading it, it'll move 170 and so forth. I've been working on, anything that goes from 10 to 30 pips,
mm,
really. Um, but with the higher lot sizes.
yeah. And no, I love that too. I love and I guess the only reason why I have the 50 is because of my risk. Um, just this safety measure that I want to play with because I'm looking to get on most of my entries. I would say 85% of my entries, unless I'm taking like an entry where I'm playing correction or I'm trading kind of like my inverse strategy.
Yeah.
I'll take less. Um, but 50 pips
Oh,
is like my baseline for what I expect to get from each entry because for me it's just patience, so if I'm not patient enough to get 50 pips now, of course, if my analysis is saying something completely different, I'll take what I can get. But most of the time, like one play this morning call, whether it's on USDJPY or whether it's on gold, um, like I'm gonna get my 50 pips. Like even so, this was I got on this call at 5. Okay, so we'd already been to that level, right? So if I got on this call at 5, we'd already been to that level. However, if I got on the charts at 320 here on gold,
mm,
I have 81 pips to go to that level. I would have
yeah,
loved that entry, right? I would have loved that entry. And then that doesn't mean once I get to this level, I'm just going to take profit. I will want to see how it reacts at this level. Now, I could potentially take partials once it gets to this level. I will do something once it gets to my next level as I trade level to level, whether that's adjust my stop loss, move my stop loss to where I'm going to be an infinite profit, take
yeah,
partial, to where now I have collected profit, and now I'm going to allow this trade to withstand correction and I'll still even move that stop loss into profit. Right. So, I'll do those two things. Rarely will I just not do anything. Because as we get to levels, buyers could just step in sporadically
mm,
and then go directly against all of the profit that we just made. So, um, you know, you got it on the board, Jason. You can never go broke taking profit, right? And
mm,
we've said that time and time again, so it doesn't.
exactly right.
But yeah, let's take a look. And we were definitely bound for this correction, guys. Anytime we see this, I will encourage us to wait for some type of bearish candle, which we have now. But it's really enticing when we see something like this and we're like, okay, the next time we can get in on a buy, let's do it. But just understanding the nature of price, it can't allow this. It can't allow just this continuous bullish dominance. It has to show some type of bearish action, right? Now the good thing
Some point.
about this move, not too many areas of inefficient price action, right? It looks like there should be more than there is. Um, but when we're looking for those inefficiencies of price action, I pay attention to the wicks, right? So anytime those wicks do not touch from candle to candle, that's
Yeah,
the first level of inefficiency, right? But then as we see this thing go up, right? So that inefficiency hasn't got, this is the only inefficiency I noticed that didn't get filled. But as we go up, okay, that candle and then this candle, right? But those two wicks, that one, right? That wick and that wick looks like that touched each other. Where's my trend line? Right? Looks like that touched each other. Pretty close there, right? And then we kept going up. So there's no inefficiency there. This is the only level still, right? And then we kept going up. And then that wick and that wick touched each other. So no inefficiency there. Normally, when we have bullish dominance or bears, no matter which way we're going, and it's consecutive candles, we normally run into inefficiencies. And this is the 5 minute. So I know if we go to like the 15, we'll have a larger area of inefficiency. But we can identify it on smaller time frames, higher time frames. It really doesn't matter because the inefficiencies will get filled. Now, I would just be careful on lower time frames, like the 1 minute, just creating so many different inefficient areas of price action. Just because it'll be a lot for, at least for me, it's a lot for my eyes to see and for my chart to see when we can just take one level at a time. Um, and so continuing forward here, that wick, pretty close there in terms of touch, nothing like this area in terms of inefficiency, right? And then the next candle comes. There was a slight break in this wick to touch this wick, right? But then that was removed by this bearish candle. So what
Mm.
I would want to see from this move right now, since we're getting weak sellers volume, right? Since we're so high, or weak buyers volume, excuse me, we are really high on our MACD, on our signal line here. So I always like to use, especially on the 5 minute. The 1 minute gets breached and broken really easily. Um, but what I like to use, especially on this 5 minute, is something like this. Like I just want to see the highest point that this has gotten to, right? And then whenever it gets to that highest point, I want to identify how price is acting, right? How price is responding. And at this level, we can see that price responded with weak buyers volume once we got to this level, right? And so this is exactly what I want to see here. If price decides to come fill this inefficiency of price action, I'd play it something like this. So I wait for it to get down and fill that level. Even if it wanted to fill it halfway, I'd be okay with that because I'm still at about a 2.5 to 1 on this entry. 30 pips roughly. I can even take it to my decision making level, right? Because I'm okay with that. 1.5 to 1. I'm always willing to risk as much as I'm willing to take. So a one to one is fine for me. It just has to do with proper risk. A point 0.5 to 1 is fine. We just have to have proper risk. That's literally it. That's all that matters. It is the risk. I've seen people with 30, 20, 25%, 30% win ratios um being profitable because of risk, just because of risk
Yeah.
management. Uh,
Mhm.
so I like this. I like this. This would be kind of what I want to see from price. Um, I'll continue to analyze if it moves up because I don't think we'll have enough momentum or strength to push us bullish, right? Just because of my current sentiment and outlook on the dollar, right? And right now we are wanting the dollar to move bullish because that is, the primary currency in this pair right here. So we want the dollar strength to continue to show. No news today, so there's no additional volatility we can rely on to push us through those levels. Um, However, I know 620 is when the S&P pre-market opens up, and for some reason the market always likes to move a little bit more during that time. That I haven't figured out the correlation yet, but I will. I will for sure figure out the correlation with that. Um, so I think earnings is tomorrow. I kept seeing a bunch of stuff about earnings for Nvidia. Something Okta. Wow, I use Okta for my authenticator app. That's kind of funny.
Mm.
Um, what is that? What is this? What day is this? This today or tomorrow? Some things I was noticing yesterday when I was kind of doing a little bit of research is now that Nvidia is a just a dominant powerhouse. It's the largest. Think about that. That's so crazy. It's the largest, most powerful financially of all the stocks. It's like it just passed Microsoft a few days ago.
Yeah, right.
And yeah, in video. Oh, here it goes. So this is tomorrow, I believe. So they'll release theirs. Look at that. Their cap $3.16 trillion. The reason this is important is because investors will use this as well as a place to move their money into. Um, and especially when the dollar is losing its value, they one thing that I've kind of am starting to understand is when the money is in investments or assets, they don't get withdrawn. They just get diversified and they get moved around, right? So, somebody could have an ETF, right? And an ETF, right? Something like that, which is just like so picture a real estate ETF, right? That real estate ETF will have, 15 real estate companies that it'll trade within that, that it's investing. You're investing into the entire ETF, but it's taking, 15 different real estate companies and whatnot, and you're creating your profit off of that. So somebody could have one of those and then move their money to USDJPY or move it to an Nvidia. Like so the stocks and the investments assets get diversified. Um and so that's why when I said the 620 candle that comes in for the S&P, that's why I think even our currencies get adjusted by stock prices. Um just because of the influence, you know, I, I'm a strong believer in the Forex market, not just because of the $7 trillion a day that it moves, but just because of the impact it has just globally, the global impact. So this is pretty like the Forex market is the head of everything, in my opinion. Um, so all the other markets will figure out how to utilize it. And so we can, use that to our advantage when we're thinking about some stock prices. Is stocks going up or down? If stocks are going down, then gold's probably going up, right? Or the dollar's probably going up,
Yeah,
right?
yeah. Well,
Or something like that is just continuously bridging those gaps. Um, and you said it yesterday, Jason. It's with all the information available, it's just picking which information we want to utilize. Um, the one thing I like about news is it's it's really straightforward. It's not like, we're trying to utilize a bunch of different indicators on our charts or a bunch of different markups or different strategies. We're ultimately just reading news. We're
mhm.
using that for volume and volatility and potential price direction. That's literally it. Literally it.
Yeah. And once you learn the news, it can be relatively predictable.
Yeah, it's exactly.
I still got a lot to learn. I can't trade the news yet. I don't know
Yeah, and
if
it
I'm
is. Yeah,
honest. I don't know
even I
if I
mean,
want to be honest.
yeah.
Every time I seem to think I've got it, it's the opposite to what I think.
No,
So,
I hear you on that. Yeah, it's definitely a very good learning process. It does take some time as well, just to understand as a whole, even understand how, like, let's say we have two folders, like both high impact folders. Let's say we have, CPI, and let's say we got unemployment, right? Based on the current state of the economy and the current sentiment of the economy, one of those can influence more than the other. Even if on even if every single time normally CPI influences price, if the focus is on the labor market that week or that month or that day, just market wide, unemployment claims will have more influence. Even though CPI, a primary read for inflation, normally moves price. Um, So being able to discern that is kind of where I'm at right now. And when we have, a news week like this, right? What tomorrow? Where's tomorrow at? Like this, right? It's like, okay, what matters here? Like what matters? What is the most important? Because I know all these tell me they're high impact and high impact and high impact, but what truly matters here? What am I actually needing to care about and look at for the overall movement? Like I don't necessarily just care about that initial movement. I really want to know throughout the rest of this week how one of these folders will gauge price and affect price. And just based on the knowledge that I've gained over the last few days, I'm going into all the key economic indicators. There's about 10. You can look it up. There's like 11 or 12, but I consolidated to 10 because some of them can fall under the same economic indicator. So there'll be 10 that I'll get into. I've dove into three so far. Gross domestic product. I've dove into the labor market and understanding wages and how even the interest rates impact the labor market. It's all one big puzzle. Um, and then the third one I got into was interest rates specifically interest rates and
Right.
why that matters, why it's so important, and that whole spiel. And my opinion for tomorrow, I won't have great importance on my labor market folders. I'll look at them, but they won't have significant importance because first of all, they come out so frequently, they come out week to week, right? Every week we have an unemployment claims folder come out every single week, right? And so what we want to analyze with that, knowing that it comes out every week, let me check price really quick. So price moving really quick, USDJPY potentially moving bullish here. I see this as a fake out. Why? Because we're not getting volume. Volume isn't even getting stronger. If volume turned, if it gave me one of these white bars, I would say, okay, maybe USDJPY is gaining some more strength. But for me, this is kind of why I put that radius in here because this is one of those times where I feel like we'll get all the way maybe and then just turn back around.
Yeah.
So I'll continue to see to analyze how USDJPY wants to move this level in price right here. Remember, we can look left, to get right on the charts. This area right here, once again, the reason I look for that three candle structure is just to confirm an area for me. I just want to know that what I'm seeing right here, we can both agree, all three agree that this level, it struggled at this level, right? Can we agree it struggled here?
Looks like
Yeah, we can agree that. If we look just a little bit to the left, we got that three candle structure. One, two, three. So then it confirms, okay, this is indeed a level that I want to see price breach because it did it the first time when it broke right here, moved bullish, right? Came and even retested, moved back bullish, came back to this level, and then just consolidated at it. Then used that same level to sell off of, right? And so
yeah.
now that we return back to that level, I want to see it break and close and stay above that level. Or I'm just going to think exactly what I still have the disposition of is we'll play something like this. Stop loss at this decision making level because we haven't gotten there yet. So price is still respecting that level, right? Entry would come on the touch of this level, right? And this would be if I'm playing my inverse, right? Because what are my confirmations telling me? My confirmations are telling us to buy, right? But this is us just flipping everything that we're analyzing and using the direct opposite, right? And so this would be an entry I would like. So let me move this to the side here. This is literally how I'm playing this right now. I have not put money into my account yet, so I have my demo account. I have not taken any trades yet. Like I said, I'll put, 50 bucks in there in a few days and another 50 on the 6th of next week and get my account. Even if I get 50 bucks in there, I'm gonna get my account my live account with something come next week. It's freaking 20 bucks. I will have something in there. Um, and so today just continuously analyzing the chart, back testing, and reading things that way. Um, and so let's see what happens here really quick. And then I'm going to go back to news 5 minute. Let's look at the 1 minute. 1 minute looks nice. 1 minute looks nice. One thing that I want to continue back testing as well that I keep noticing within the market is the abnormality between our MACD and price, right? I don't like when this happens, when we get red dot, right? And then we get green dot. Where did that green dot come in? Let's see, green dot right there. So red dot came in. So green dot came in on price at a higher level. So the green dot came in at a higher level on price than when this red dot came in, right? But on our MACD, the red dot came in at a higher level than when the green dot came in. I don't really like when they're not moving in sync, to be honest.
Yeah.
Um, I don't know the exact correlation yet. I have seen it go directly against us. I've seen it continue to move in that same direction. So I just don't have ample data to be able to say, okay, when it does this and this, we can expect this. Kind of the same way I was talking about the market sessions earlier. We just need to continue just gather data on stuff like that. But it's definitely something I continue to analyze when I see the abnormality. Is like, is price going to continue up? Is it going to maybe lose its strength because of that happening or whatnot. So um, you better get out of that. All right. So 5 minute. Oh, look at that. There goes that volume though. Right. So now we get some volume to come back in. However, still really, really high on this, really high on this line. Let's see if candle closes. And then if it does close, let's see how it reacts after closing. And then this is kind of the next zone I'm gauging. So I still like both of these entries, right? Have not taken either one. I still like for this one, this buy to come correct this level, right? I will reassess after it breaks this level. If it breaks this 4 hour decision making zone, then I will be a little more convinced that we're gonna go attack this imbalance. Because that's ultimately what I'm hunting for is us to move towards this area of imbalance. Um,
A lot of marching up.
what was that? Yeah, it's definitely marching up.
It's a lot though. It's gonna have to retrace at some point, isn't it?
At some point it's gonna have to come back down. Even if it's to this level, it's gonna have to come back down. Let's check FinViz and see USDJPY. Let me take a screenshot of that. I don't remember what it was at earlier, but oh, actually I have it up here. Ah, same one. Same one. So many tabs open. So that 0.68 USDJPY is sitting at. We'll see how that continues to fluctuate. Let's see. I want to put an alarm on this guy. That's just because I don't want to forget about that. Gold And so gold's been marching up. So is USDJPY.
Ooh,
That shouldn't be happening.
no, they
If
normally go the
gold is
opposite.
marching up, then USDJPY should be going down.
But it's interesting because I mean, dollars have been going up and gold's been going up. So I think that's what sort of makes it go um, like XAU, not XAU USD. Oh, it is.
Yes.
It is. But yeah, so it's that correlation I noticed.
And then we look at the dollar. I mean,
Yeah.
the 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 dollar is ultimately my best friend.
Hmm.
Just because that correlation there, USD dollar, but then XAU. If I just pull up this side by side really quick, this XAU USD is super clean.
Yeah, right. And hardly any inefficiencies there either.
It's hardly any there on that way up. It's
Not the way
100%
out. Is it?
right. It's hardly any on the way down. It's uh,
Yeah, well, I
yeah,
was trying.
once
There was only one, and that's that big drop, and one other which I made a few bucks on. Um, that was around the 25, what was it, 2502 or something? Yeah, 2502, 2503. So you got another little march coming up. I can't find that inefficiencies to see where that's going.
you're looking at gold.
Yeah, sorry, I am, yes.
Yeah.
Holy moly, there you go.
Yeah,
Jesus,
gold,
Jesus.
that right there. I'd want
What
to see
was that
how it
from?
react to this level.
There's no news. What was that from?
That I'm not
There's
sure.
hardly,
I was gonna say it was the pre-market, the S&P, but it hasn't it's not 620 yet.
and
620 is when that comes out.
there's not a lot of buying volume there either for that. Some, but not much.
Mm-mm.
That's weird. Dollar reconciled down.
Yeah, and we're super high on this signal line as well. 5 minutes not terrible. The 5 minute looks good.
Yeah,
Five
wish I'd
minute
said,
inefficiencies on this five though on the way up here. See that one's not bad. Say right there. That one's not bad. Yeah, I want to see how it reacts to this level. Even this one here, I see just this area in here. You know, you got decision making level created here. You got decision making level here. Right? You even have decision making level here. And so this area, I think is going to keep price down. I think it's going to keep price down. So we'll see what happens there. USDJPY closed above that level here that we were analyzing from way back. So now let's see how it responds. If it wants to move back below it, will be a good sign for us to go bearish. Maybe even a good sign for a correction somewhere in this level. Ideally, of course, I want us to correct that inefficiency, but there is still inefficiency in this level, right? Just from about there to there. So something for price to return to. Um, ultimately it needs to find liquidity and inefficiency, a price action or a decision-making level. So price will look for one of those. It will look for one of those. What's going on, Mama? Um, all right. My alarm just went off. My 5 minute area that it touched. So yeah, just showing me that it touched that 5 minute area. And so let me see something here. So we got our dollar marching up. Strong march up. Look at that inefficiency. Good grief. I think this is maybe one of the areas Q had posted yesterday in the
What time was
Discord.
that?
But man, that's insane.
Yeah, what time was that?
This was 7 a.m. Oh, this was last week, 7 a.m. I'm like, hold on, is my timer? This is 7 a.m.
Oh,
last week that this inefficiency was created.
right.
Um, and then it got a little bit, worse. It went down a little bit more, but then it started to recover that entire area slowly, but
Mm,
surely, right? And so
yeah.
now we're just slowly moving into that, about halfway on that, which which is honestly enough, right? It doesn't need to necessarily fill it all right at this moment, right? It filled a lot. What I am noticing about where it did stop is this level in price, right? Once again,
Oh, yeah.
that structure that I'm looking for, right? So we got stopped up about right halfway through the inefficiency, stopped right at a decision making level. Not only did we stop at the decision making level, but it's our 1 hour strong time frame, weak buyers volume, right? All of that contributing together. I do like us to potentially turn around at this level to support our potential bearish movements on USDJPY and to continue our bearish movements on actually this would send gold up because USDJPY would be going down with DXY. So if DXY and USDJPY are moving downwards, then we want to see gold move upwards. Let's see why gold came down here. So gold came down here, messed with that level. Okay. All right. So thinking in terms of liquidity. Liquidity, I know I've talked about imbalances this morning, but let's talk about liquidity for a second. On gold, I've noticed liquidity is a lot different. That is only because this pair is so volatile. There are just it looks like there are a number of different points of liquidity. So we have to discern high value liquidity versus just liquidity in the market. Because we don't want to just mark up every single point of liquidity. Because once again, for me, that type of stuff messes with my eyes and my analysis. To where I start to just overanalyze and just think too many different things. So the main points of liquidity we want to identify, I'm going to tell you, are at decision making levels and at points of when the move was generated. So either decision making levels or points when the move is generated. And what I mean by that, so like this is the liquidity that's sitting here right now. Because at this point we got a bearish move. Like so when price does move back bullish and it's ready to move back into a bullish trend potentially, or even just to take some sellers out, right? It's gonna wick above that and then move back downwards or move back upwards or whatnot. Um, so that's the first point of liquidity in terms of I want us to notice. The second point is where we moved to on this sell. Why did price stop here? Right? Price stopped here. Okay, because we also have a 30-minute decision making level. So it's a strong area for buyers to potentially show themselves, right? And as they have, right? But why else? because of this liquidity, right? And so we had this liquidity at slide that down at that candle there. Why do I care about this liquidity? Because it was at a decision making level, right? It was at a decision making level combined with this 7 o'clock candle, right? Combined with this 7 o'clock candle, I believe on Friday that would have been a news folder. So that would have been an institutional number or institutional candle, which is just money. Let's see. Yep, Friday, 7 a.m. Boom, 7, 7, 7. And so that's the other thing I will mention. The reason why I look for liquidity at decision making levels is because 80% of the time when I find my decision making levels, it's at an institutional number. And all an institutional number is just a clean number. That's kind of how I want to convey it. So 2,500, super clean there. 2495, those type of clean numbers, because these Goldman Sachs, Morgan Stanley, JP Morgan, they aren't sitting there right in front of their computer like us and pressing a button. Now they may be, but the majority of their entries, they come off buy limits, stop limits, sell stops, buy stops. I forget the exact. There's two different ones, basically to where say price gets to this and they expect it to go up, then it'll put them in a buy, right? And I believe that's called a buy limit, I believe. Um, but either way, that part really doesn't matter. The part that matters the most is that institutions act at those levels, right? At those clean levels.
Mm.
And so this liquidity is money, because not only is it at a decision making level, but it's also right on an institutional number. Not only is that true, but it was also on a news candle. Like right after was a news candle. So that's just a strong point of liquidity. So what did we see price do? We saw price sell off and sweep that liquidity. Clean liquidity sweep right there. Just enough. Perfect, right? So thinking about our current bearish sentiment, right, on my current bearish sentiment on DXY, right? I know DXY has been trending up, but let's say DXY decides to turn around at this level, right, and move back downwards to that level. That's going to support USDJPY to do the same, and that's going to support gold to move back bullish to these inefficiencies. However, once those inefficiencies, get swept and whatnot, price could continue back this way. It could continue back downwards, right? And so I want to see how it reacts to this level here in price. Right? I believe this is on my 5 minutes. Okay, 1 minute. That's fine. Yeah, I want to see how it reacts to this level in price. My 1 minute decision making level. Let's see how it reacts to that area. With the dollar moving up, I don't want buys right now. With the dollar moving up, I don't want to get in buys on gold. I don't mind buys on USDJPY, but I'm not playing the current state right now. I'm looking at the potential of what could happen, um, which is DXY rejecting this level, moving bearish. It could also break this level and continue bullish, but it is a strong decision making level. So that is what I'm waiting to see. I'm more on the side of it rejecting this level and moving downwards because of the bullish dominance we've had. Um, and so it's just really just being patient, activating patient Pete. Patient Pete is activating.
Mm.
Patient Pete is activated. So let's see what happens here. USDJPY, check Finviz. Not much change. 0.01. Not much change there. So many tabs open. All right, let's go back to this news. I was talking about a little bit ago. Today, tomorrow is what I was looking at. So tomorrow, I'm going to be analyzing goods trade balance. I'm going to
Oh,
be analyzing GDP growth rate. I'll be analyzing corporate profits. I'll be analyzing those three. I will look at the unemployment claims. Like I'm not gonna just be able to ignore it. Um, but this is really important right here for us to understand. With these three folders coming out, this is just one folder. It's just the unemployment folder. It's we're used to seeing it like this on Forex Factory, right? But it just looks a little bit different. This is perfect, guys. All right, I want to show you something. This is why I switched my platform from Forex Factory to my FX book because of this. Because of this of goods trade balance. Look how the lack of importance that is placed on this goods trade balance folder, right? But then we go to my FX book. My FX book tells us this folder is important,
mm,
especially this on Thursday. It's not always red on my FX book. Sometimes it's orange, sometimes it's green, meaning low, or yellow like Forex Factory, and sometimes it's not. But this folder is so important for tomorrow. And what we have to be careful of is when these folders come out, that initial price movement that we have, that initial price reaction that we have from that, we have to make sure it aligns with what our goods trades balance is reading. We have to make sure it aligns with that. So I'll have a better understanding of what number we want to see here. Actually, let me just look into my notes really quick. Few seconds here. Let's see. Actually, let's go to where's my what's up, my huh? So we want exports more expensive, stronger currency, imports greater than exports. Keyboard. Keyboard just died. There it goes. All right, let's see. Because this is really important tomorrow for us to be able to discern. So I want to get some really clean data here. Hold on. Respecting that there. This is exactly what I wanted to see at this level. Um, is just the decision making. Like I love when this type of stuff happens because I don't really like at this point, if it wants to go bullish, fine. If it wants to go bearish, fine. This area has already confirmed what I needed it to, and which is why it just keeps building confidence on that three candle structure and how we find those levels. So I just love when that it's for me in my analysis. That's kind of like it's telling me I'm right. I love when that happens, and I not that I'm right and wrong. I don't really look at things like that on the market, but it's confirming that I'm understanding and interpreting that correctly. So I just appreciate when my DMLs are respected.
Hmm.
Let's see here. Mixed effects on employment. Some argue that trade deficits reduce domestic jobs, especially in manufacturing sectors competing with imports. Okay. However, others contend that trade deficits don't necessarily cause overall job losses. Let me do this. So anytime I use AI, which is for 90% of my research, because it's Google on steroids. It gives me my sites, it gives me my sources, it gives me YouTube videos, it gives me Google images, it gives me everything I need. And I just continue to have a conversation with it until I figure out what I need. And this one's really cool, Perplexity, is because I can basically like let's say I didn't know what trade deficits meant. I could literally highlight it, hit ask for follow up, and it'll break down that specific one, give me sites I can go to and actually like read on trade deficits. And it's actually so valuable to me just because it reduces all the um, you know, websites that aren't super, verifiable, credible. So let's see here though. Trade deficits are often associated with a decline in manufacturing job, as increased imports can lead to reduced domestic production. This is particularly evident in okay, so that means goods trades goods trade balance equal to goods exports minus goods imports. Yeah, what this doesn't tell me is the freaking exports to imports. That's what I want to know. I want to know which one is because it just says negative. I wonder if let's see. Let's look up where's mine? Oh, let me get out of this. That, that. All right, here we go. Um so so in June 2024, imports were greater than exports. So that means it was negative 96 million. So that means whenever we're negative, imports is greater than exports. Makes sense. Whenever we're negative, imports is greater than exports. Makes
Yeah.
sense.
Yeah.
So what we want to see is we want to see this number. So this is funny. Their consensus is the trade deficit went up. That means imports to exports became even more of a differential. So what we want to see from our unemployment is we want to see unemployment go down. We want to see this go up actually, because if it goes up, that supports that lines up with our goods trades balance. Why that's important is I can see this happening. On the initial release of our unemployment claims, I can see us getting bullish news from unemployment claims, right? And then giving us a bullish move really quick on price, but then goods trades balance coming in and and showing itself on that. So that is why I kind of wanted to look into that. Because then later on, wow, all these folders are at the same time actually. Because then you have GDP, you have corporate profits, right? Corporate profits, I like that because that's going to determine the borrowing aspect. From what just got into it briefly, that um, based on how profitable these companies are, it does adjust their borrowing. Like companies and corporations do borrow, and so interest rates even affect those companies because they reach out to private investors and banks for funding. Now we wouldn't I mean I wouldn't think that, especially when companies are so profitable. If we think like Apple, for instance, can't imagine Apple reaching out to an investor or a bank or anything for any type of funding, but yeah, they do, just because of the financials on the back end. They probably have it so structured. They know profit margin. They know how much they can borrow and whatnot. But just kind of shines light on how great of impact these interest rates have, not only just on, the fluctuation of currency, but, when we even consider, stocks and stuff like that and how that may affect our currencies. Um, hmm. You can't be yelling, mama. Nobody wants to listen to that. All right, let's go back to this here. See what's going on over here. See what's going on over here. Dollar respecting that level. See what's going on over here. Wow, look at that. Look at that level that gold went to go touch really quick. Look at that. That level right there that we just marked.
Ooh.
Just a touch. And once again, thinking about liquidity. Thinking about liquidity. All right, Milan. Okay. Because this is good. This is good. I want to show you guys this. This is really good. All right. So forget this for a second. Remember, I said high quality liquidity, high quality decision making levels, and institutional numbers. That's where I'm looking for my high quality liquidity. We could have said, look, this was a point of liquidity right here. We could have said this was a point of liquidity right here. We could have said that this was a point of liquidity right here, because all I'm looking for are wicks. Essentially, that's to start my liquidity search. I'm looking for wicks. Anytime we see wicks, there's liquidity there, right? And so now we just have to discern where, because there's a number of wicks everywhere. Where's our high quality liquidity, right? And so this is on the 1 minute time frame. I'm you just ripping my notes. Hmm? So this is on the 1 minute time frame, but this is our decision making level right here, right? Right there, right? So at a decision making level, we had that wick. right? Put that weight right there. And price comes right up to that level, right up to that level, and just wicks above it, just enough to take out every single one of those sellers that were still in this trade. Every single one, right? And so this is supporting a bullish move on the dollar and bullish move on USDJPY if gold continues to move downwards. But this is kind of what we were talking about earlier as well, Jason, just the moving a lot quickly,
Mm.
right? Because look at that, man. It's just we went from consolidating a little bit here to shooting up 74 pips
And bouncing
and
back down.
shooting right back down. Another 95 to 100 pips, right? This I would have loved to play one of the inverse trades on this. Um, just because of the respect of that level. Like that second candle was nice there. And then what am I noticing again? I told you I don't have accurate data on it because I haven't pulled a lot from it. But I'm seeing this red dot and I'm seeing this green dot. And I'm seeing this red dot on our MACD happen higher than our green dot, but I'm seeing on price that it happened lower than our green dot. And I just don't like when that happens. And this time we're seeing that what proved to be the truth teller was our MACD, not price. Price manipulated what it should have done. The MACD kind of told us the potential direction, right? So the MACD showed us that we were heading downwards, even though the price on this green dot tried to, show that we were actually moving bullish. So I just want to continue to analyze that. I would probably need like 100, back tests and entries of seeing that over and over and over again and how it responds. It's an actual thing. Like I'm not just making that up. It's called convergence and divergence. I just am just trying to figure out which one is which, and how frequent it happens so that we can analyze it in that way. Um, maybe it only happens at decision making levels. Maybe it only happens on freaking Wednesdays. It's this thing. We want to find our edge. We want to continue to identify um, our edges in the market. Our edges in news, our edges in liquidity, our edges in indicators. We want to continue to once we find our edge, we can refine our edge. Our edge can never be too sharp, right? If you think about like a blade, like the edge of a blade can never be too sharp, right? It can just slice something up a whole lot easier, the sharper it is. So we would want a pretty sharp edge, and that is another reason why we've dove so deeply into macroeconomics, because it's like that little thing of the blade that you just it's just how it feels, um, the longer we continue to do this. But let's see, USDJPY still just consolidating in this area. This next level will be really key. Let's move this over some more. Let's get rid of it actually. This one's still in play. I still like this one. That first one, I still like it if it decides to come all the way down here. But if it does want to correct, I'll look to identify this level of correction or even this level of correction to then move bullish. But ultimately want to see how price reacts to this level here. This 4-hour decision making level here is what I'm analyzing. Um, look at our 5 minute. Our 5 minute, we have to be careful watching our MACD all the time on the 1 minute and taking everything for what it says on the 1 minute, because our 5 minute is going to tell us a little bit more. And what I'm seeing on our 5 minute was, we did get super high on our signal line. we've shown correction with that signal line, but no actual movement with it. But volume, our volume is just weak. It's just weak, even though it's kept price there. It's just weak. I've gotten into trades where I've taken buys in a situation like this, even like back here, where I've already seen volume get weak, and then I just get in trouble. I just get in trouble. Um, and with so many freaking trades available, and there being no signs of the forex market or any trading market just shutting down, um, forcing anything is just directly hindering our progression. We don't need to force anything. Don't need to force anything. Proper risk is not a force. I'll say that. If you have proper risk, then you're not forcing it. You're letting it happen because you've assessed the risk. So I want to see how this reaction is 5 minute just got our red dot. Ideally, I want to see our price get below our conversion line, right? Just look at price in the respect of that conversion line. There's a reason. That's just because that's the midpoint of price. Conversion line takes the last 9 periods of price and it says who's in charge of price right now, right? Buyers. Buyers are in charge. The moment we get below it, it's going to start indicating who's in charge, potentially sellers, but there has to be enough of that. It can't just like in this area, like it broke down briefly for a second, but that doesn't mean sellers were in complete control here. They showed themselves definitely, but they didn't take control yet at this moment. And now what determines, you know, sellers or buyers in control? When it aligns up to my strategy. When this is in line because we're above our conversion line. We have our cloud, bullish cloud, we had volume, so that's in line. So that's accurate. On this move, price was in the cloud, right? We red dot was above the midline, so it just wasn't in line, right? However, on this one here, price below the conversion line, below the cloud, volume, red dot was above that midline, but volume nonetheless, and our signal line below the midline. So there, everything was in line, right? So that's kind of how I'm analyzing that conversion line there. Sometimes it does, peekaboo on the other side of one another. Um, but as long as everything is in line, we can use that as a confirmation when um, sellers or buyers have taken over, a specific area of price. And so like in this situation, as this as price gets below this conversion line, I want to see it do it for a handful of candles uh, before I'm like, okay, I think sellers are starting to show themselves more than a correction, really starting to show themselves, take this market back over and maybe head back towards this inefficiency. Um, but a lot has to happen for that on the 5 minute, which is why I'm watching this 5 minute. Um, because the other thing I'm watching is how it reacts to this 4 hour level as we're seeing showing signs of struggle. There was a decision making zone that was a decision making level that was created right next to it. Right. So I want to see how it respects that three candle structure. Ironically enough, it's right within this area. And by ironically enough, I mean not ironic at all that that happens there, just because of the continuous signal of price telling us what we are doing, what we are doing. Check gold. You know, Like the dollar, dollar still struggling, still struggling. Yeah, so I'm just sitting here on my 5 minute charts. Now, this is liquidity when we're talking high volume. I wouldn't call this high quality liquidity. Um, I still it's still liquidity nonetheless because it's right at a decision making level. And so if price does hunt and take that out, then I can make the assumption without, you know, putting myself in a tough spot, because we don't want to assume anything in the market. Um, but I can potentially anticipate price coming to take out this level as well, just because those are really close levels, and this is the main point of liquidity over this. Like this is more high quality than this point of liquidity. Let's see. Decision making level just got touched again, right? On my USDJPY. So USDJPY really respecting that level. And what did we get? We have a price below our conversion line now. So for the next, 5 candles, really, it's called about 5 candles. I want to see it stay below. I don't want to see it move back above. I don't even want to see it close back above at all. I want to see it stay below that level and respect that level. Whether it's consolidating or not. Like it doesn't have to just go bearish right now. It just needs to stay below that conversion line, and not close above it. And I'll like us attacking at least, look on my finger, mama, at least this level here. Like something like this, right? Taking something like that. That's not even enough room. That was not enough room for me to buy though. Um, so I wouldn't take that entry. That's just kind of a markup I put there, just because we don't have my 50 pips that I'm looking for. I'm not, you want to say hi? Is that what you want to do? He does not like to be left out.
And just going to give you a bit of a heads up, Marcus.
Mhm. Mhm.
Um, I'll get an earlier than normal morning tomorrow, so I'm going to drop out about midnight. Oh, sorry, in about 7 minutes and head off to bed. I'll miss the news, but I've got to get my girls somewhere early. We've got to drop in somewhere before school, so got to get up earlier than normal.
Sounds good. What's midnight for you over there? Or what's that for us?
Well, it's 7 minutes to midnight now, so
Okay.
I
Oh,
think
should
you're
be
ten
about seven
o'clock.
hours.
Yeah, Mike. Yeah, 7 hours is it? Or it's
Yeah, it'll
15,
be it'll be
15
seven
or
at
16
at
behind, I think. 16 behind.
oh, I understand what you're saying. So you're going into tomorrow. Yeah, that
Yeah,
makes I see.
correct. Yeah, yeah,
I forget about that. So yeah, it's about 15 hours.
yeah. Thereabouts. Yeah, 15 hours. Yeah, I think so. Your 5 o'clock is our 10 o'clock. I think something like
Hey,
that.
that's not a bad way to go to bed there, just get some trades in, and then make somebody hit the
Well,
sack.
it's a New York session, and the thing is, I'm normally up with you till 12:30 or 1, and then I'm sort of not asleep until 1:30 or 2,
Yeah.
and then I'm awake at like 5:30 or 6. So it's taxing sometimes when I'm taking the girls to school, but when I'm not, it's okay. If I can sleep in. But I normally do I do some morning trades and after the London session morning, which is 4 o'clock here. That works well. And the New York session's good too. Like I made a couple of good trades while we're there, while we're talking. It was nice. Happy to do. Or while you were talking, more so, and I was listening. So, yeah. Been sort of like playing with um utilizing those fair value gaps quite a lot. I've only just sort of really only sort of understood it last night.
Yeah.
I had a little look today, and it's really handy to be able to. I mean, it's basically it's they're free pips. You know what I mean?
Yeah.
You know it's going to happen. You just know it's going to happen. So um, just
Absolutely.
learning how to put them in there, and then and backing it works well.
100%. Yeah, no, those are money for price to move right towards good profit targets.
Yeah, and even if you're small, you just go in with higher lots
Yep.
with a chatterbox. Let's- All right. We're going to start to wind down, mate, and go, go to the toilet, get myself ready, and hop into bed and go to sleep. I'll catch you on the morrow, though, hey?
Yes, sir, Jason. I'll see you mañana.
Thank you so
Alrighty.
much.
Thank
Um,
you.
I'm loving these sessions still. It's honestly so helpful. It just hones my trading experience and skills um, every day, every
Mm.
day, and every day I'm doing better. Um,
Yeah, it makes me happy.
my risk management is getting better from what it was
Yes.
just by listening to you guys and giving me the patience because I'm seeing more, if that makes
Yeah.
sense.
Yeah.
You know,
Slowing down for you, it seems like.
needs to, and it's been really good and much more profitable.
Yeah,
You
I'd
know,
love to hear that.
rather than erratic. So bloody sensational, buddy. Well, I'll catch you on the
Well,
morrow.
I love
Manana.
that. Appreciate you, Jason. You have a great one, all right? Sleep tight.
See you, mate. See you, Jazzy.
I will be right back here. All right, let's get back to it. About 24 minutes left on this call here. USDJPY doing exactly what I wanted to see it do. Um, just as far as respecting this level, this is a 5 minute level here. And I'll say this. Yeah, the lower the time frame, the more fragile the level, but that does not change the fact that it is a level. It does not change that at all. So this position was not one I was going to take. It's just one I wanted to see if it respected, first of all, my stop, just because it was a very, very tight stop there. Uh, but just wanted to see as far as what price did when it got to this level. If it just completely breached it and broke through, or if it actually did respect this 5 minute decision making level right there. So it would just be respecting that low there, right? So I want to see how that goes as we get to it. Ultimately, if we feel that inefficiency, that was the one I was waiting for earlier, and I would like a buy if things supported a buy after price got down here. Because just remember, I need at least 50 pips to go to my next level. And this is a good point too. Being that this 5 minute level did show some strength as price got here, that is probably the level that I'll respect as well. So my 50 pips, my entry has to come down there, that's actually perfect. That's 50 pips right there. But that's where my buy entry would have to come in for me to be following my trade plan and my trade guidelines. That's what they're there for, by the way, too. Um, a trade plan is there to plan your trade and then to trade your plan. So if we're not doing that, then we're not giving ourselves a good chance to build a sense of discipline, right? And to just continue to build our discipline if we can't even follow our trade plan, right? If we're just kind of out here just taking trades whenever they come in or not following any guidelines or anything like that, this market will wall you up and spit you out if that was the approach. So as price gets right to that level, we're seeing what happened. We're seeing it respect this level. That three candle structure is what it's respecting, which is why I continuously, you guys, every time you hear me on one of these calls or you watch the replay or you see a video, on Instagram or TikTok or whatever the case is, and if I'm talking about decision making levels, it's going to be this three candle structure. 100%. One, two, three. That's what I'm going to be talking about in terms of how I find my areas in price, right? That way I can trade level to level and I'm not and I have a direction on where I want to take price. Um, so let's see what happens as we get here to this level. If we start to turn around on our MACD at this level and we have not moved below this yet. So let's say we start to, MACD starts to lose seller's volume, right? Our signal line potentially starting to give us that, it's starting to maybe do one of these, right? And start curve a little bit, right? Once I see that, and as long as we respect this level in price, I will like to see about some buys. I won't enter any just because of the 50 pips that I need for these decision making levels, but I will be analyzing and seeing how that reacts. And maybe um I can actually take a trade. I have my demo account, and this is one of those instances where you know it's a chance to get data, to pull data from this moment in a trade like this. Um, and so maybe this is one of those cases where I increase my lot because I don't want to try to like take this trade through the moon, to the moon, just because, like I said, the strength of these levels, I would want to see it break one of these levels first before I'm convinced it's going to go to the moon. This is beautiful as well. This is why we use multiple time frames, and why all different time frames provide just different things, right? So this is the 5. This is the 5 minute, right? And we're seeing possible signs of price slowing down at this level since its bearish move, right? And we're seeing on our MACD just seller's volume still. It hasn't gotten weak yet. MACD hasn't curled yet, and it's maybe giving us a potential green dot look. None of that's happened yet, right? But we go on the 1 minute, and what do we see on the one? We see on the 1 minute, first of all, volume becoming an issue on seller's side, right? Does this mean that volume on the seller side can't just step in rapidly and then break through this level and head bearish? No, that's not what that means. It just means I'm noticing that volume has gotten weak at this level where my decision making level is on my 5, right? So I'm noticing that. And so what I want to see on this 1 minute, and why we can utilize the 1 minute, is I just want to see price move bullish. I want to see some buying volume come in here. I do see a decision making zone. This is so beautiful right at that level, right? So on my 5 minute decision making level, I have a 1 minute decision making level. 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 What is now these are in the same area and these are in the same area. But what is all of these confirming? What are all these confirming to me? That this level, my 5 minute level, is a strong area in price where it determines a decision, right? So even though this is the 1 minute, that is kind of how I'm blending 5, 1, even thinking about hour, right? Even thinking about the hour, I have inefficiency in price, right? Below where we're at right now. So remove that one because that's a 5 minute inefficiency. I like higher time frame efficiencies. I'd say 1 hour to daily at very most. Weekly, it starts to just get too. It just takes long to feel that inefficiency. So it's not that the weekly inefficiencies are not proven to be accurate. It would just take longer for us to get to those inefficiencies. And the way that we trade daily is enough, is the farthest we need to go out. 1 hour is really clean as well. Um, but this is kind of what I'm seeing here. So let's see how price reacts to this level, right? So this is what I just created on my 1 minute, or 5, excuse me. And let's see how price reacts to this level. And we're seeing that. We're seeing how it's reacting, right? We're seeing the potential loss in seller's volume here. It just went gray for a second. We're seeing that, right? So it's just continuously pulling information. Look at our dollar, okay? Our dollar is doing what we wanted to see it do. Moved up to this inefficiency in price action, right? This inefficiency was about this big, right? And price cleaned up about half, About half got stopped at a decision-making level, right? 1 hour, 1 hour chart doesn't change the fact that this is a decision-making level. And this one's a double whammy, right? Because you got the first black candle, the second the first black candle, then we have that white candle, we have the second black candle. That by itself is a decision-making zone. But then we had this white candle, this black candle, and then this white candle come in, and then that became a decision-making level as well, right? So you had a 2 by 2 on the 1 hour. You know, it's I'm pretty confident in us moving bearish here. Um, feeling this inefficiency of price action, you know, moving down to this 1 hour decision making level potentially, just because this rejection of this dollar, and this is on the 1 hour. Gold's moving up a little bit. Let's see how gold responds to this level. Left liquidity behind, but I like sales here. I like sales here. I'm gonna enter a sell. This is my demo account. So I just entered a sell, point 0.1 lot. Point 0.1 lot. This is giving me a chance to do a few things. First of all, to get a to see a trade, to take a trade. Not just that, I'm out here taking trades once again. But just along with my analysis, I like to get in entries just as I'm analyzing. Um, And now this is an inverse VXT trade. The VXT strategy is the primary strategy that we trade. This is the invert, like literally flipping those confirmations. So that's what this one is here. So let's see how this reacts and responds, at least to fill this inefficiency. 144.5 is kind of what I want to at least see this get to. I don't need it to get to my decision making level at the bottom here. Um, I definitely can't hold it until then, but I would want to see how it reacts about this level here, which is when that inefficiency would be filled. So it's just about being patient Pete. Look at the dollar. This is beautiful right here from the dollar, guys. Like, so freaking beautiful. 5 minute chart, right? 5 minute chart moves towards that inefficiency of price action, right? What did it get stopped at though? What did it get stopped at? Because we need to look left in order to get right with price, right? What did it stop at? Look at that, guys. That's just clean. That's clean right there. It didn't fill the entire inefficiency. That's fine. It's fine that it didn't fill the entire inefficiency because there's tomorrow, there's Friday, there's Sunday, there's Monday, Tuesday, Wednesday, Thursday, Friday, Sunday, Monday. You know what I'm saying? There's more days to trade. There's more days for price to move, right? So eventually, I'm gonna leave this here, and then I'm gonna try to come back to this clip and find where I find where I say these exact words that I don't care if it's next week, next month, or next freaking year. This inefficiency in price will 100% get filled. I'm saying that 100% guaranteed that this area gets filled, right? So just keep that in mind for future. As as gold is not gold, USDJPY getting close to filling that inefficiency completely. Dollar's nice still, gold's trickling up. Let's see how let's see how it reacts to this level. Keep in mind, not something that you may have to mark up at this time. And let me just do this. Just keep in mind of the liquidity points as we move bullish on price. I like this actually. Liquidity there. Okay, I can use that. Liquidity, liquidity, liquidity on this way up, right? So this is something that price is going to return to on every single one of these, actually, until we got to about there. So I'd say all the way up to about that level. We have inefficiency and price action, right? Inefficiency and price action. So I definitely can see price returning in here eventually. That'll come after liquidity is taken, right? Mhm. Oh, 7 minutes. Excuse me. Didn't take that one. Let's get that one off here. I did take this one here. Let's see if I was to put a stop loss, see what my risk would be. 27 bucks. That's not bad. How many pips is that? That's about 39. 39 pips, 27 bucks. I'm also trying to get a read on this USDJPY and just the fluctuation of lot size to pip movement um, and whatnot, just so I can be able to determine my risk. So, point one is about, you know, we'll call it $27, but 39 pips. So point one has about a 12 pip difference to dollar amount. I relate that to gold because gold point one, 27 pips is $27. Um, that's kind of like the gold is my baseline for understanding risk and whatnot. So, 12 pip difference, point one, that means on a point 0.05, that would be about 13 and some change, $13 and some change on 39 pips. See if price is gonna fill that entire area of imbalance or if it's gonna turn on us. Gold once again gets halted at that area. And based on this, I can see us going back downwards on gold, which would send USDJPY bullish, which would send DXY bullish. And of course, for that to happen, I really just want to see this area get broken to really confirm the dollar is gonna continue bullish. But the reason why I'm saying that on gold is because of this volume. We're just losing volume. That doesn't mean volume can't come in. It definitely can. I want to see this level get respected too. So it could be something like this here. Wouldn't mind playing something like that. Of course, as confirmations tell us that's okay. We think about entry points. Bunch of news just came out. Bunch of news just came out. All right, let's see what happens. This is the stock. This is the oil stocks that or today. That's what this is. Gas stocks. So consensus, they projected a yeah. This is gonna send USDJPY bearish because it's gonna affect our dollar. Okay. So it's unstable. Generally, rising oil prices tend to weaken the Japanese yen because Japan is a major oil importer. Higher oil in prices increase Japan's import costs and can negatively impact its economy. Okay, so higher oil prices can increase import costs and negatively impact its economy. However, this relationship can change based on factors like interest rates, risk, sentiment, and global economic conditions. Okay. So what are those prices? 74.31. USDJPY start out at 0.82, 0.62, 0.82 or 0.62. 0.68. So yeah, it did start out in the positive side of things. Currently sitting on the computer is running really slow. Currently sitting on 0.50. So moving downwards, which is great. What did gold or not gold? Oil was at 74.89. So 74.31. Oil prices have gone down, but we know the correlation between, just from the brief insight we got just now that it's really unstable. There's a few other economic conditions we have to consider. Um, but yeah, we're talking about a $2.15 million change in the consensus. And so, if I can figure out how this impacts crude oil stocks are a measure of the change in the supply situation of crude oil on a weekly basis. A higher than expected figure should be seen as negative, bearish for the USD, while a lower expected figure should be seen as positive or bullish for the USD. But again, I feel like those economic conditions vary. Uh, um, so let's see. All right. Worse than expected, plus 2 million. A higher than expected figure should be seen as negative, while lower than expected figure. So lower than expected figure is what we got. Lower than expected figure is what we got. So it should be seen as bullish for USD. Um, I don't have complete understanding on this yet, just because I'm not seeing that. Um, but as we just kind of got some brief knowledge on oil prices and USD JPY and just the unstable nature of it, and just it depending on different factors, interest rates, risk sentiment, global economic conditions. So if we use that, USD JPY, it doesn't give us much to go off of without diving a little bit deeper. Oil and gold often move inversely to the U.S. dollar when the dollar weakens. Commodity priced in dollars like oil and gold tend to rise. However, this direct relationship between oil and gold can vary. They sometimes move together as inflation hedges or safe haven assets during times of economic uncertainty, which I said a little bit earlier. I would call these times economic uncertainty now. And we're kind of seeing that correlation there as we just got that news folder, right? So we got slight bullish action from gold, and then on the other side of that, some bearish action from the dollar here. USD JPY following suit as well. Uh, so let's continue to just watch this for a sec. I'm gonna see if we can get a close on this take profit here, with price going to touch this inefficiency of price action about 144.5. I'm gonna take my profit. Look at our volume. I might take profit now just because our volume's getting weak. I just secure my profit. $5. How many pips did we get on that? We got about, doesn't tell me. We got, it's like about seven pips, roughly. Just because volume got weak here on my 1 minute, like price has already gotten down here. And this is the thing with USDJPY. It likes to do this. Like you know, I don't really have a doubt that it's not gonna, you know, first of all, fill this imbalance, but then come back and touch this 1 hour decision making level. Um, it's just, a matter of when that's gonna happen. So I didn't mind securing my profit at this point for two reasons. One, because you can never go broke taking profit. For two, I'll have another opportunity to scale in. But I didn't like the way the MACD was communicating to me right now. So I needed to wait. I needed to wait and take my profit. I mean, I can get back in anytime. But 5 minute losing that seller's volume ever since, the top here. So it's just bound to correct. Dollar looks nice though. So as far as what I'll be looking at for the rest of today, what I want to see, let's go to my higher time frames. All right, so looking at let's go to my 4 hour. All right, looking at my 4 hour chart. Let's get rid of that. Let's get rid of that. Actually, let's leave that there. Looking at my 4 hour chart, what I want to see is a few things. I want to see this is an area of inefficiency. I want to see that get filled completely. On the smaller time frame, there's a little portion that's not full yet, but honestly, let's call it filled. We'll call it filled. There's a very small portion left, right? Ultimately, what I want to see is price come attack this liquidity, right? This is the higher time frame. So that's why I said I'm gonna look to scale back in once, my confirmations have corrected themselves and whatnot, and I can scale back in at a good price. But I'll look for price to move towards this liquidity, right? That's kind of what I want to see as long as it respects this level. So as long as it respects my 4 hour level, my 5 minute level, as we saw, it went above my 5 minute level, but the very next candle has respected it completely. So I'll look to analyze how price reacts within this area for the rest of today. On gold, I want to see price. I want to see how it respects this level, right? And I want to see if it goes to hunt that inefficiency of price action, right? So I want to see those two things on price. Is it going to hunt that level, and is it going to move to that inefficiency of price action, right? And then we have this chart. This let's go to my one. This is a 1 minute and a 1 hour decision making level. So yeah, let's see how price reacts to this 1 hour decision making level. I want to see about 25.10. I want to see how it responds to that. And then I just want to see it play within this 2500 range and kind of make a decision. That's the first part I start at, is figuring out, where price could potentially go and where we can react from, off of. Where can we act from? When can we act? What do we need to see to be able to potentially react? Just because we want to react, we don't want to predict. We can analyze and observe and project and, have an idea of what could potentially happen. Potential. We always want to focus on the potential. It keeps us open to the possibilities, right? And that's a little tip you can take throughout life, honestly. You figure out the potential of anything, the possibilities within that potential become endless, endless. So yeah, that's pretty much what I'm seeing. I like USDJPY moving bearish. That's my sentiment there. I like gold moving bullish. And potentially going to hunt that inefficiency of price action, but we know gold has been on a tear. So I'll look to analyze for the rest of today. No news for the rest of today. Nothing that we should worry about. Tomorrow is a heavy duty day. Let me actually say nothing to worry about because these folders are important. 17-week bill auction that just has to do with money, right? In terms of the dollar, the central government, they issue bills and government securities, and those interest rates that the bank sets fluctuates how lucrative and um cost worthy these bills are, right? And these 5-year notes. So I will look to see how the fluctuation of the interest, because this is basically the yield or the interest rate um, on these bonds and these notes. So I want to see how that fluctuates, similar to yesterday when we had this folder here, right? 42-day bill auction and 2-year note auction decreased, right? In that. So what does that mean? That means the dollar would have lost value, right? Because let's say you put in 100 million before that 100 million got you a 4.4% return on or your yield. Now it's only going to get you 3.8, right? So it's gone, the value of investing into a government security bond or anything like that has gone down, which is why, yesterday we did see somewhat of a bearish move from the dollar. So yeah, that's pretty much all I got today. I will continue to analyze price, like I said. And other than that, you guys will hear from me in the Discord. But we will see you guys tomorrow, bright and early and bright. And other than that, see you. Joe, appreciate you hopping on. Always great seeing you on there. And you have a great rest of the day. Once I can find out where my freaking thing is to end this call.